gentlemen, good day and welcome to the Sanjivani Paranteral Limited Q3FY26 earnings conference call. From the Sanjivani management, we have with us Mr. Ashwini Khemka, Chairman and Managing Director, Mr. Srivadan Khemka, Executive Director, and Mr. Pritesh Jain, Chief Financial Officer. We will begin with management's commentary, after which we will open the floor for questions. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Srivadan Khemka. Thank you, and over to you, Mr. Khemka.
Thank you. Good morning, ladies and gentlemen, and thank you for joining us for Sanjivani Paranteral Limited's Q3FY26 earnings conference call. Before I begin, let me mention the standard disclaimer. The presentation that we have uploaded on the stock exchange, including interaction in this call, contain or may contain certain forward-looking statements concerning our business prospects and profitability, which are subject to uncertainties, and actual results could differ from those in such forward-looking statements. For the benefit of participants who may be joining us for the first time, Sanjivani Paranteral Limited is a WHO GMP certified pharmaceutical manufacturer with over 2.5 decades of operating experience. We specialize in sterile injectables and oral solid dosage forms, with a primary focus on essential and life-saving therapies. Our products are exported to more than 25 countries across emerging markets, and we operate manufacturing facilities in Navi Mumbai and Dehradun, supported by an in-house R&D capability. In addition to our core formulation business, we are building new growth platforms through joint ventures in IV fluids in India and nutraceutical manufacturing in Europe. Q3FY26 marks an important quarter for the company as we transition from a single engine business to a multi-vertical growth platform. For the first time, the Pune infusion facility has begun contributing to consolidated revenues, and our overseas nutraceutical venture continues to build commercial traction. This reflects the strategic investments we have made over the past few years to diversify both our manufacturing base and revenue streams. During the quarter, the operating environment remained stable in terms of demand, but uncertain from a policy standpoint. Export-oriented businesses globally continue to monitor tariff developments, currency movements, and evolving regulatory expectations. While these factors did not materially disrupt our operations, they reinforced a cautious approach across industries, with companies prioritizing supply continuity, margin protection, and disciplined capital allocation over expansion. Within pharmaceutical generic sector, underlying demand remained resilient, supported by chronic therapies, affordability pressures in developed markets, and expanding healthcare access in emerging economies. At the same time, pricing sensitivity and regulatory scrutiny continue to shape competitive dynamics, making quality, compliance strength, and cost efficiency increasingly important differentiators. Against this backdrop, our business delivered strong year-on-year growth of approximately 20%, driven primarily by export markets and product mix improvements. We also recorded the first revenue contribution from SPL Infusion Private Limited, which strengthens our manufacturing footprint and opens a new long-term growth avenue. The facility is currently in early stages of ramp-up, and its contribution is expected to increase progressively as capacity utilization improves over time. Our Prague-based nutraceutical venture is also gaining momentum. Customer engagement has increased meaningfully, and we remain encouraged by the pipeline of potential business from European markets. Overall, we remain confident that FY26 will be a milestone year, with all three business verticals contributing to consolidated performance and positioning the company for a broader growth trajectory going forward. With that, I will now hand over the call to our CFO, Mr. Pritesh Jain, who will take you through the financial performance in detail.
Thank you, Srivadan. Good morning, ladies and gentlemen. A very warm welcome to you all. Let me share the update on the financial performance of the company for Q3FY26. On the base business, that is the standalone numbers, the company reported a revenue of 20.9 crores, a growth of 20.2% year-on-year. The growth was driven by higher shipments due to easing of the logistics situations as compared to the previous quarter. The EBITDA was at 3.9 crore, a growth of 36% year-on-year. The EBITDA margin was at 18.4% versus 16.2% in Q3 FY25. The year-on-year expansion in EBITDA margin was due to the product mix which we were able to ship during the quarter. Profit after tax was at 2.6 crores for the quarter, a year-on-year increase of 37.9%. Let me provide the segment-wise performance for Q3 financial year 26. Injectable revenues declined 9.7% year-on-year to 11.7 crores. Oral revenues increased by 153.3% to 8.6 crores. Nutraceutical revenues stood at 0.56 crores in Q3 FY26. On market-wise performance, exports constitutes 76.9% of the total revenue. The core markets of Middle East, Africa, Latin America accounted to 76.9%. Our subsidiary, SPL Infusion Private Limited, Pune, recorded revenues for the first time in the history at 1.2 crores. On consolidated basis, the company reported revenue of 22.1 crore, a growth of 27.1% year-on-year. The growth was driven by strong growth in the base business and contribution from the Pune subsidiary. The EBITDA was at 14.1 crore, a growth of 44.8%. The EBITDA margin was at 18.5% vis-a-vis 16.2% in Q3 FY25. Profit after tax was at 2.8 crores for the quarter, a year-on-year increase of 46.3%. The profit after tax after non-controlling interest was at 2.7 crores for the quarter, a year-on-year increase of 42.6%. With this, we can now open the floor for the questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants who wish to ask a question may press star and 1 on the touchtone telephone. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Our first question comes from the line of Rahil Shah from Crown Capital. Please go ahead.
Yes, hi sir. Good morning. Can you hear me?
Yeah, we can hear you.
Yes. So sorry, I missed the opening few minutes. Can you just please reiterate what led to this increase in margins for this quarter? What helped us?
It was a product mix that we shipped out in this quarter that enabled us to achieve better margins.
Product mix was the only reason then. So do you see this mix to continue and the margins to sustain at these levels for coming quarters?
Yeah, of course we do look forward to maintaining this, but as you know, this business demands the various kinds of products, so there is going to be a little bit of a shifting quarter to quarter, but the general trajectory will be upward.
Okay. And out of the three segments we have, injectables, oral, and Nutra, which is going to be the key growth driver ahead for us? Where is the key focus for the company? And in line with that, if you could, guide us with some sort of growth when it comes to quarter four exit run rate and for FY27 when it comes to revenue.
Injectables definitely it has always been our forte, and it is going to be the growth driver for the company as well, especially with the commercialization of the IV facility. It expands our offering product basket, and we will be tapping into more and more hospitals because IV is something that is very easy to get your foot in the door with. Along with that, our injectable offerings from the small volume plant will increase.
So would you like to share any sort of guidance for FY27 when it comes to top line growth? What is the company targeting? I believe you closed.
Sorry, I didn't get your question.
You closed FY25 with 70 crores of top line, sir. So going into FY27, and for that matter, even FY26, what will you end the year with? And the next year, what sort of growth are you looking at?
FY27 from our core business of Sanjivani base business, we are looking at somewhere around 90 crores top line, and SPL infusion will also contribute around 60 to 65 crores. So that should be our injectable. And it will all be focused mainly by injectables.
You said SPL contributed for the first time, right, in quarter three to consolidated revenues. How much was that, the quantum?
1.2 crore.
And for quarter four, are there any expectations, any numbers you have forecasted?
It will be good. The facility is still in the ramp-up phase. We cannot project a number, but it will be significantly higher from this 1.2.
Okay. Do you think it will be in double digits crores already, or it will take time?
Yeah. I think we should be able to match that.
Okay. And what about the core business for FY26 as a whole? So you've done, just a moment, I think 22, 15, 37, and you've done 55 crores or so in 9 months. So what can we end the year with?
This year from the core business, we're looking somewhere between 73 to 75 crores.
75 crores. Okay. Okay, sir. Thank you so much. All the best.
Yeah.
Thank you. Our next question comes from the line of Karthik, an individual investor. Please go ahead.
You able to hear me?
Yeah, we can hear you.
Okay. So I just heard from the previous question that you were expecting 90 crores from.
Sorry to interrupt you, sir, but you are not audible. Can you please repeat your
You're
question?
able to hear me?
Yes, I can.
Okay. So my question was, the injectables alone is projected. So can we expect?
Sorry to interrupt you, sir, but your voice is breaking. Can you move to a different environment and speak?
You're able to hear me now?
Yes, comparatively better, sir. Please go ahead.
Okay. So I heard that from the injectables, 90 crore revenue is a peak revenue that is expected out of the core business. And what is the time frame that we are looking to achieve this 90 crores? Will it be in a 2 years time frame, or it will be in the next financial year?
Sir, as I said, by FY27, we are projecting to hit 90 crores from our base business. So that is the thing that I mentioned.
Okay. Thank you, sir. So one more question on that is I could see a filing on the warrant conversion I could also see that few warrants are remaining to be converted. What is the latest update on that? Is everything converted and the company received the money from the promoters?
All the warrants have been converted and all the money has also been received from the promoters.
Okay. Another follow-up question is on the capex projections. Now that we have done a substantial capex on the injectables, and then we have already got into a JV in the Prague. So what would be the capex expectation for the next financial year? I believe it is too early to expect that, but what would be the rough capex projection that you would be looking at?
So the capex to the existing facilities with the base business, the injectable facility and the tablet plant, will be to the tune of 4 to 4.5 crore.
Okay, sir. Thank you. That's it from my end. Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on the touchtone telephone. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Our next question comes from the line of Santosh Karunakar from Financial Finance. Please go ahead.
Good morning, sir. Can you please let us know what's the current utilization for SPL and what utilization should be expected? How do you plan to ramp up next year?
Do you mean the utilization for the Pune IV plant?
Correct, yeah. Capacity utilization for the IV plant.
The plant is practically a new plant, so it is in a very slow. Currently, we are operating at 20-23% capacity. But next year, going forward to FY27, that time it will be around 40 to 50% and more than that. But currently, it is operating at 23 to 27%.
Okay, thank you. And in the past, we had some issues with the freight, and especially when we are sending to African markets. And so, are we all able to manage that properly now? Is it all?
Yeah, some logistic issues were there initially because of the geopolitical situation in the world. Now the things have been sorted out, and there are 2-3 different routes for logistics which are now in operation. So those hiccups have been over.
Okay, thank you. And just want to reiterate, you mentioned our projections for the next year for the base business will be around 90 crores and the infusion will be around 50 to 60 crores, right?
Yes, correct.
Yeah, thank you. That's it from my side. All the best.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on the touchtone telephone. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Our next question comes from the line of Gaurav from India Bridge Limited. Please go ahead.
Hi, sir. Thank you so much for the opportunity. I believe I heard that next year you're targeting 40 to 50% utilization in SPL infusion. I guess you had a JV with people who are already in the business of selling these products for quite some time. So why are our expected ramp up, only to the extent of 40 to 50% next year since everything is now on board? Why such low capacity utilizations predictions for the next year?
See, in infusion, what happens is the plant is so new, and there are new products which gets on approval month-on-month basis. So once the entire product and approvals of new additional products are there in the place, then it can go on. A single product cannot go to a certain level. And in this between, we have, in the last Concall also, we have told that we are going to do a specialized product also for this. The trials and the stability studies are also going on in between. So that is the reason we are going slow on this thing, so that by the end of November, December, we have a good product portfolio of around 20 to 23 products, which most of the competitors do not have. they are having to the tune of around 12 to 14 products. Our basket will be 23, 24 products in the pipeline from Pune facility. And then it will be
given the
operational and go ahead.
And sir, and given this product mix, value-added product mix that you are sort of targeting, what's the peak revenue that you can accomplish from this, facility?
It can be, it will go around 120 to 130.
Yeah, because in last call we had mentioned somewhere around 110. So, and we are sort of, what's the rate for the significant increase? What's the reason for it?
No, the product mix. There are certain run-of-the-mill products and certain are specialized products in this IV segment, which we have developed and our R&D team has developed this product. For this, the stability studies are going on. And once the approval is in place, so they are fetching better margins and better pricing in the portfolio. So it will be going around 120, 130 in the peak.
And what kind of EBITDA margins can we achieve, from this facility at peak utilizations?
We have told around 19 to 22.
Understood. And sir, one final question from my side. Okay. Yeah. One final question from my side. You have this facility that is ramping up capacities now. You have your base business that's growing, 15% and 15%. So where is the, maybe FY28 onwards, where is the next leg of growth going to come from? What are your plans? Because you mentioned that your capex plans are only to the extent of 4 to 4.5 crores in FY27. So where is the next leg of growth after this completion of, where do you expect that growth to come from?
See, as we have told in earlier conference as well, that our company's approval in the West Africa and now East Africa is in place and started. And those approvals are expected in the current coming financial year 27, FY27, FY28. So our base business will be doing growth, which is around 18-20%, and it may jump up more also. Infusion business is also going to pick up everywhere. All the markets are going parallelly, and the Prague business also. Now, all the 4 plants are in operation, and there are no hiccups or no regulatory hurdles left behind. So it is just the plant's approvals getting more approval because the Pune plant has just started. The WHO inspection will be triggered in the month of March. And after that, we will be getting that plant also inspected by various regulatory authorities where our products are selling in the market. So then, just now before the plants, and we are the only company with the combination of infusion, small volume injections, tablet capsules, and nutraceutical under one umbrella. So this will help the company to have a good presence in the market and acceptability, because the distributor needs the combination of all these 4 which we have with us.
Okay, and on our base business, exports business, we are working with a small base right now and growing at 10-15%. I believe a lot of time it gets taken to get registrations and approvals in base territories. But given the small base, when can we expect to grow at a significantly higher pace of 25%, which is possible given that you have capacities, available? When can we see the base business start to grow and accelerate, sales growth 25% or so?
We expect next year from quarters, second or third quarter, we will be seeing this result in the base business going at a much higher growth rate.
Okay. Thank you so much for the opportunity, sir. Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on the touchtone telephone. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Hello. Thank you, everyone.
We have a question from the line of Surbhi Saraugi from Nexum Capital Market. Please go ahead.
Hello, am I audible?
Yes, ma'am, you are. Please go ahead.
Okay. Sorry, sir, if I'm asking a repeat question. I joined a bit late. Can you give some guidance regarding revenue and profits for Q4 and next year? And some update regarding the new JV plant?
So, I mentioned in my opening remarks, the JV plant is now operational, and it is the first quarter that has contributed in our consolidated revenue to the tune of 1.2 crores. There's a lot of disturbance from...
Sorry to interrupt you, sir, but Ms. Surbhi, there's some disturbance in your background, in the background. Can you just mute yourself and let the management speak? Perfect. Sir, you can go ahead.
Yeah, so as I was saying, the plant has contributed 1.2 crores of revenue in our consolidated revenue for the first time. And it is functional now. Regarding the guidance, this year we would be closing at around 73 to 75 crores on our base business. So that includes the Q4. And next year we are targeting somewhere around 90 crores in FY27 from our base business, and around 60 to 65 crores from our SPL Infusion Private Limited.
And sir, regarding profit margins?
So the profit margins for the base business would be on the same trajectory as we have done for the last 9 months. Around EBITDA would be around 16 to 17%. And as far as the Pune business, since it's the beginning, so we are targeting the EBITDA in the range of 17 to 18% there, which would further go upwards as the plant achieves a higher utilization of the capacity.
Okay, sir. Got it. Thank you.
Welcome.
Thank you. Participants who wish to ask a question may press star and 1 on the touchtone telephone. Our next question comes from the line of Akash Dhanna, an individual investor. Please go ahead.
Yeah, yes. So I had a query regarding the shareholding. I mean, promoters have a bit low shareholding, and I was listening to one of the interviews before, and there were plans of increasing it. And I think going by the stock price, last week it was very close to where you guys did the financial allotment also. So do we plan to increase shareholding for promoter in future?
As we have seen this year, the warrants were being issued to the promoters. 6 lakh warrants were issued in the current year. And those all are converted, and the promoters then pump in the money in the company. So every year you cannot take more than 5% as a promoter increase in the shareholding. So every year, if you see down the line for last 3-4 years, promoters have been constantly increasing their shareholding in the company. And we, as a company and as a promoter, would like to increase our shareholding year on year.
I think the warrants were converted last year, right? So, I mean, for future, I'm asking, do we plan to at least make it 40-45%?
It was converted current year, not last year. They were issued, and they had a period of 18 months. So partly they were converted last year, partly they were converted this year. So once the warrant is over, then before that you cannot do. And as you said rightly, every year we are going to take and increase our shareholding.
Maybe another question. I think last year, February, you mentioned about like similar PPP projects and some progress. It's been like almost a year. So has anything progressed on that part?
That is there in the pipeline, and this will be known and informed to the shareholders and stakeholders of the company. in the fourth quarter results.
Thank you. That's.
Thank you. Our next question comes from the line of Rahil Shah from Crown Capital. Please go ahead.
Hi, sir. Thank you again. So just getting some clarification on the capex part. So you're saying currently you're done with the capex cycle, right? You won't be having any in FY27?
So I told you that the major capex plant is over at investment, all the plants operational. But in pharmaceutical, every year there's a capex upgrading the machines, buying the new machines, software, everything. So this year, our capex will be around 4 to 4.5 crore in the base business plants of injectable Mumbai and
So this constant like recurring capex amount is what usually year on year for maintenance and so on?
4 to 4.5 crore.
4 to 4.5 crores.
Mr. Rahil?
Yes, that's it. Thank you.
Participants who wish to ask a question may press star and 1 on the touchtone telephone. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you everyone for joining us on the call today. One small announcement that I would like to make is the revised Schedule M by the FDA has been made live, and I'm happy to report that all our plants are compliant with the revised Schedule M, in which from our estimates in our country, there are only 20 to 30% of the plants who will actually comply. So your company has all its plants coming under this compliance. We sincerely appreciate your trust, support and continued confidence. We look forward to delivering on our commitments and to speaking with you again on our next earnings call. This concludes today's earnings call. Thank you very much.
Thank you. On behalf of Sanjivani Paranteral Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.